Hi there. This is Charles Goddard. Thanks very much for stopping by. So we're gonna take a look at a chart of gold, and what we're trying to accomplish with our little video here is to layer on top of a plain chart of gold some indicators that you'll find available to you on your website, your trading platform, or on a free service such as stockcharts.com. So we're going to start with the gold chart with totally naked, and you can see that we've got what's called candles representing the movement of the price for gold for a given day. So in this case, we're looking at red candles indicating that the day ended lower than it started, and the green candles indicate that the day ended up higher than it started. So the first thing that we want to do when we're deciding, do we buy gold, sell gold, be indifferent to gold, what do we do? Well, the first thing we want to do is establish, is there a trend? Can we identify a trend? So what I've done is I've put the highs and lows on a chart for you, and you can see that from the left we've got a high and a low and a high and a low, high, low, and another high, and this higher highs and higher lows indicates an uptrend. And then across about the middle of the chart you can see that the highs are getting lower than the previous highs and the lows are getting lower than the previous lows. So now we have a series of lower highs and lower lows, which tells us we are now in a downtrend. So we identify the trend first of all, and if we're in an uptrend, we're only going to go long gold, and if we're in a downtrend, we're only going to go short gold. And that is something that is explained more fully on my website, laughingstocktrading.com. And so then the next thing we're going to put on top of this, since all we've got is daily prices, we're going to put on a moving average. So we're going to put on two moving averages. The red line is a 5-period simple moving average, and the blue line is a 21-period simple moving average. And all that is doing is the red line is taking the price of gold for the previous 5 periods, in this case days, adding them up, dividing by 5, so that the most recent point of the red line is an average of the last 5 days. And the blue line is doing the same thing, except it's for 21 days. So the last point you see on the blue line on the right hand side of the chart, that point represents 21 days of prices added up and divided by 21 to give us a 21 period moving average. Now this kind of smoothing is very useful, and you as a beginner will find it very handy to help you make decisions. So then the next thing we're going to add on to this chart is we're going to add what I find a mainstay for me when it comes to looking at charts, and that is rate of change. Now the rate of change represents the energy of the marketplace. So price and energy should be operating together, and the beauty of this is that rate of change should be just a little bit ahead of the movement of price. So if we see that's the case, then all is well. But if we happen to see, for example, a new high in price and we don't have a new high in rate of change, then that's a divergence and it's a warning. But we'll go into that. That'll be taken care of more fully in the book and on the website laughingstocktrading.com. So we've got our rate of change. Now how are we going to trade this now? So let's take a look at we've got a downtrend from maybe the third high in the middle of the top of the chart. And the way we're going to do this is you're going to enter a short sale, and don't worry about those definitions. That's explained more fully in the book. And what the short sell does is it allows you to make money while the price of something is going down. So in this case, when we see the red line cross the blue line, so in this case crossing below the blue line, we are going to go short this. We're going to go short gold, and we can see that the as soon as the rate of change is below zero, confirming our short sell, we're going to go ahead with that. So let's go to exactly October, and you can see a bit of a vertical dash line there, and you can see the red line crossing the blue line, and if you follow that dash line down to the little OCT October, you'll see that the rate of change is crossing the zero line at the same time. This is permission for you. This is telling you, go ahead and short this, go ahead and sell this. So whether you've got a futures account or not, there's symbols that you can use that will cause you to benefit from gold going down. You can use it in your RSPs, you can use it in your TFSAs, wherever. I'll give you a list of those things in the little book. And so then you're in the short sell. The gold drops just as you thought it would, and along the way, and you're going to manage this trade, and you are going to, first of all, you're going to put your stop loss just at the high point, just up and to the left of where you've entered the trade, which is at the dash line that happens to handily come right at October, and so your stop is going to be there. And then as gold sinks, you're going to, once you've got 10 or 15%, let's say 10% profit on your trade, you're going to take half your trade off the table, and you're going to move your stop from that high point to where you entered the trade. Now the beauty of this is now you've got some profit in your pocket. Your stop loss is now at the point where you entered the trade. This means now anything that gold makes you going down from this point on, you're playing with house money. You're free now to let this go where it may. No one can take profits out of your pocket. It's in your pocket and not likely to come out for a while. And you even if gold turns back and soars upwards, you will be stopped out at your entry point, and you will retain the profits you've got in your pocket. All right, so next question then is, when do we get out of this? So what we do is we've got our stop at the entry point, and where we're going to get out is when the price crosses back across the blue line. And you can see that point not too far to the left of November. So at that point, you are now out of this trade, and you're really pleased with yourself. You've done well. And now you're watching for the next signal. So we're in a downtrend, and so you're only going to take the short sell. So if we go along a little further, we see a high is formed. Keep going, and we'll see the red line crossing the blue line again. And if at that point where the red line is crossing below the blue line, we sink to the bottom of the chart, we can see the rate of change is going below the zero line. We are now in another short sell. So we are selling again. We've got our stop at the high point, and the gold drops just the way we liked it, and we have taken some money off the table. We've brought our stop loss from the high point down to our entry point. We are playing with house money, and that trade goes all the way down to the low, and you can see just as you're getting almost to the end of this chart, you can see a green candle closing above the blue line. We are now out of this trade. Thank you very much. It's been a beautiful thing. So we are really pleased with that, and that is in essence how you do it. And I'll give you a more explanation in the little book, and you can If you go to the website www.laughingstocktrading.com, there will be fuller explanations of everything, better definitions, and so on. But in the meantime, drop me a line at the email address showing there, and I will send you a copy of this little book that is going to show you that even with the basics, just a few little things, that you can do things for yourself to better effect. Anyway, thank you for stopping by. Thank you for listening, and good luck with your trading and investing. Goodbye now.